Baba has gotten beat up over the last few months, and now that their punishment has been revealed, they are up over 9% as of today, April 12th. So, is this stock now in the clear? What's up, my Milk Money Millionaires? I'm Joshua. Welcome to my channel where we learn how to make our money, make more money. And today we are going to be talking about some Alibaba news and whether I think now is the time to buy, as well as a winning trade I made last week. And if you'd like to see more content like this, please like and subscribe so I can feel the love and keep wanting to make more videos. And as always, a reminder that I'm just a financial edutainment YouTuber, so this is not professional financial advice, so invest at your own risk. So what has been going on with Jack Ma and Alibaba? This Chinese growth machine fell heavily out of favor last fall as the Chinese government cracked down on Baba leader Jack Ma and Ant Financial in particular. Ant is the lending arm of the Alibaba conglomerate of Chinese e-commerce companies. The government was claiming antitrust violations, and rumors were that some of this was in response to Ma's criticism of the government. After Ma wasn't seen for a while, it was rumored he disappeared, maybe not so voluntarily. With the jitters of investing in a company not on the powerful Chinese government side and scary news of Ma's disappearance, Baba absolutely tanked from a high of near 320 in late October down to a low of 220 before rebounding to the $265 range. I really wanted to scoop up this deal back then, but I had reservations myself with the unknowns of the situation in China, and then when it rebounded to 265 early this year, I thought I missed out. But it fell again down to the low 220s during this tech wreck, and after seeing this strong support over the last week, bouncing off that low 220 mark several times, I decided to open a small position, and I bought a call in case this was the bottom, and started to do my research for this video to decide if this was the time to make a larger long-term hold position. Then on Friday, it was announced that Baba would indeed be punished with a $2.8 billion fine. Investors seem to be very happy with that bad news, as finally the uncertainty of what would happen to Alibaba was gone, and hopefully the crackdown will not be hanging over the stock any longer. If that is indeed the case, that Baba is in the clear, I think it has huge upside based on its valuation and growth numbers that we'll be getting into shortly. But I would keep in mind, it still could be risky knowing that we can never fully understand what's going on with Chinese companies, and at any time we can find out there was one surprising new shoe to drop in the Jack Ma saga. However, I'm leaning towards believing China would rather support one of its most successful companies as they try to grow their GDP. Alibaba's CEO says that this ruling and this punishment should not have significant impacts to the company, and after they've complied and made adjustments with regulators, they do expect this overhang to be lifted. With a trailing 12-month revenue of over $644 billion, this $2.8 billion seems to be very much manageable, and I suspect Baba will be back to focusing on growth. So what is Baba and what should it be worth? I've always been intrigued by the idea of Baba as a way to get some Chinese exposure to diversify the portfolio, and as the purported Amazon of China, I always thought Baba could be a good bet. With all of this pressure on the stock price, I wanted to dig in more to the company to see if it was finally time to invest. Alibaba is an e-commerce giant with 500 million users, not only in China but all over the world. They have a network of e-commerce sites, including their flagship Alibaba as well as AliExpress, which is focused on international buyers. Taobao, which is like an eBay, and they even have Alipay to help facilitate transactions. They also have a hugely successful wholesaling business where many of the retailers buy products before rebranding and reselling them in their own stores or on Amazon, for example. AliCloud is a future business that they are in development for content delivery and database business as well, similar to Amazon Cloud Services. Alibaba has a huge moat, dominating the e-commerce space in China with strong network effects. So strong, in fact, that they just paid $2.8 billion in antitrust fines. And I think they have potential to grow globally as other businesses try to source more goods from China. So the big picture story of Baba seems pretty great. An e-commerce giant with a giant moat on sale after some bad news is over with. What do the numbers look like? Baba management reported they expect $710 billion in revenue this year, with a revenue growth annualized over the last 3 years at 47% and a 5-year historical earnings per share growth of almost 30%. These are mouth-watering numbers, especially when the profit margin is at 24.6%. They also have very healthy balance sheets and great free cash flow numbers. if they were to continue this crazy growth rate, you can expect very strong returns going forward. And I would say it's a great buy as long as you're getting it at a fair price. So let's look at valuation. Its PE is currently at 25, which is much lower than its 5-year average of 39. And its price to forward earnings is only 18.6. And Peter Lynch would be very happy to see its PEG ratio is 0.85. In this market, it's very hard to find anything under that magic number of 1, and Morningstar gives it an intrinsic value of 311. So on review, this looks like a killer growth stock and a value play all in one, which would be the holy grail of investing. This could be one heck of a buy at this price. It's almost too good to be true, and that's where the bear case comes in. With Chinese stocks, when they are too good to be true, maybe they are. What if those revenue numbers are fake? What if the government decides they really, really hate Jack Ma or don't hate Baba, they just want it to be 10 different businesses? Who knows? On paper, this looks like a great buy, and if you're going to take the risk and get some China exposure, you might as well get one that looks good and find one with a risk worth taking. And buying while it's out of favor, not when it's hot, gives you a little more margin of error. I bought a leap last week to hopefully pick the bottom without having to risk too much capital while we waited for the antitrust info to come out. And today I was very glad I did. But now that it's over, I feel safe buying a larger position of actual shares. I'll probably not put in a full position size just because of the China risk, but I'd like to definitely buy some that I'd feel safe holding forever. I might watch to see if it pulls back from this one-day spike a little bit first. Hopefully it'll consolidate for a few days so we can feel safe buying in. However, you can try to fine-tune that entry in the short term, but ultimately if these numbers are true, then we will be happy in 5 years. Either way, if we get it for a few bucks more, a few bucks less. As long as this story is real, we've got a heck of a stock. Do you agree that it's a steal right now? Is the growth prospect legit? Do you think China will leave them alone? And I guess most importantly, is Baba too good to be true? Let me know what you think in the comments below. Again, I'm Joshua. Thanks so much for watching. Can't wait to see you in the next video where we learn how to make our money, make more money. Peace.